You continue to watch our conversations here from Davos 2025, and as we've been telling you, it's either about President Trump or it's about AI, and there's quite literally nothing in between. Joining us now is a man who is spending all of his time focused on digital transformation and what corporations are doing to adopt many of the new technologies, including, of course, AI. Nigel, many thanks for joining us. It's great to have you back here in Davos. So, as I said, nothing in between. It's Trump or AI, and AI was the theme here last year as well, but what we're hearing this time around, that it's a little bit more real.
Absolutely. And I think what you saw is companies move out of the proof of concept, trialing stage, and starting to really recognize that this is as fundamental a shift as the move from steam to electricity. Right. I think, there's lots of analogies being used, but primarily speaking, every aspect of business can be reimagined. From a Publicis Sapient perspective, a lot of the work we're doing with clients now involves building agentic architectures where you have very specific agents acting almost as a digital workforce, in part alongside your traditional workforce, doing very specialized things, from healthcare to retail and financial services. Every one of these things now is moving businesses forward pretty substantially.
Yeah, that clearly is the theme here. Agentic AI is what a lot of people are talking about, but you talked about how the digital workforce is working alongside the traditional workforce today. But do you see a divergence between that, and how soon can we expect that divergence to take place, if at all?
I don't see a divergence. I almost see it as a convergence. So if you think about, the way we think about this is like Iron Man. You've got a person in a suit. If you don't make investments in the suit, you just have a very good person. Yeah. But if you make investments in the person and the suit and you bring them together, you get a superhero. And it's almost that idea of how technology and people are going to need to coexist fundamentally, where you're now starting to value people not just on their own abilities, but on their abilities to leverage this technology. I mean, one of the things we've done at Sapient is built a platform we call Slingshot, which we've invested hundreds of millions of dollars in, building a lot of the expertise we've had over 30 years of transforming business into this. And even in our organization, as we bring new people on, we're constantly saying to them, look, we want you to leverage technology and the capabilities you bring. It's not either or. And it's not competition to show how much better you are without the technology. It's about saying how you can bring these two things together to accelerate.
But what is the pace of adoption now as you talk to your clients, from Marriott to McDonald's? What are we talking about in terms of the speed as well as the scale of adoption?
The adoption right now, I think, has moved from testing AI in the context of specific use cases to now broad-based applications. Where companies are recognizing that by connecting different data sources in their organizations, they're able to do things across customer service, sales, and marketing that they were just not able to do. When you think about, personalized marketing offers based on the last action you had. When you think about allowing you to pick your own hotel room based on the view or the personal preference you express. When you think about room allocations, every one of these things now can be automated on the basis of data that you have shared with these organizations for the purpose of them actually helping you. So now as you start to see that evolve, I think there's a real opportunity.
But is it more in terms of IT spends, or is it a reallocation of capital as far as the existing IT spends were concerned?
I think definitely most organizations will tell you, and most CEOs in Davos will tell you, that there's no magic tree where they can shake to generate more money. So I think a lot of this is essentially about how do they fundamentally look at the inefficiencies in their business. We're doing large programs in a number of industries. In one case, a 10-year mainframe migration, which is not a project that Sapient would typically do, because it was a low-cost, large-scale, low-cost offshoring type operation. Now using our platform and using AI, our tools in AI, that program's taking 3 years to do, which means it's freeing up so much capital for the company to reinvest in more transformative initiatives. It's the same thing when you think about how call center first-time right handling, when you start to think about marketing messaging, every one of these things being more efficient means you're freeing up more capital for folks to actually do things better.
Speaking of doing things better as well as large spends, I don't know if you got the overnight announcement that came in from President Trump about the $500 billion between
Stargate.
Stargate. I mean, when you hear numbers like that, What does it mean eventually as far as the ecosystem is concerned? What does it mean in terms of the opportunities that could potentially open up?
I started by using a power analogy at the beginning, right?
Yes.
And I say, I do think AI is going to be as ubiquitous as electricity. And when you start to think about what that means, is in the same way that you saw massive capital infrastructure investments in electricity, whether it was nuclear, whether it was traditional power plants, in order to power what was effectively the Industrial Revolution, I think you're now going to start to see the same in this massive AI transition. One of the biggest things that come, and it's not just the United States, it's the UAE, it's Saudi Arabia, it's India, it's China. All of these markets are making massive investments because they realize without that underlying infrastructure, companies are going to struggle, particularly when you move beyond the Fortune 500, to start to leverage a lot of this capability to really reinvent business. And I mean, India's done a phenomenal job of establishing, public-private partnerships with payments, with national identity, which has accelerated millions of
digital
people
adoption,
into digital adoption. And I think what you're going to start to see with AI now, countries realizing that unless you start to make these infrastructure investments, you're not going to see the same kind of progress that you want to see.
Well, you talked about India, but let's talk about your business in India specifically. It is one of your largest in terms of headcount for Publicis. So, take me through the view on India, what the outlook is from here on.
We're extraordinarily excited about India. When you start to think about where the world is moving to a very literate, English-driven, technologically driven workforce, and India has all of those things in spades. Our workforce in India continues to do some of our most pioneering work. Some of the platforms I talked about building, whether it's agentic platforms for industries, a lot of that work happens in global teams, but driven in large part by our teams in India. One of the things we observe about India, though, is I feel like there's a huge opportunity, but also a huge disruption to the traditional hierarchy of Indian IT services. I think historically IT services were about cost arbitrage in the context of India. So you scale businesses on a cost arbitrage basis. What we're seeing now is this next generation,
which is the move towards innovation.
Absolutely, which you have to start to do to move towards innovation, but also recognizing the fact that AI is going to mean a significant amount of disruption to those lower cost, lower paid cost arbitrage jobs. And I think what you're starting to see is the Sapient model in India, which was always focused on the very best engineering talent, people who we were always competing with the startups, not with the traditional IT services space, because we were looking for those people who were real builders in the organization, people who were looking to pioneer stuff. And I feel like when we think about India now, it creates another huge opportunity for real disruption there.
Well, yes, we will look at the opportunities that AI throws up in India. And thanks very much, Nigel, for joining us here in Davos to take us through what you make of the move towards agentic AI and where we find ourselves. Thanks very, very much for joining us.
Thanks for having me.
We will take a break, but the conversations continue here in Davos. We're back in a moment with a lot more. Don't go anywhere. Stay right there. Welcome back. You're watching a continuing coverage here from Davos 2025. We've been getting you a whole host of global CEOs to give us a perspective on what the year looks like, but more importantly, what the trends will be to shape things for the global economy as we move forward. Joining us now is the global CEO of Bain, one of the world's largest consulting companies. Christophe, thank you very much for joining us here on CNBC-TV18. It's a pleasure to have you with us on the program. I want to start by asking you about what you make of the read here in Davos in terms of confidence. We're picking up on a lot of optimism from CEOs today, but what's driving that to your mind?
Yeah, there is a cautious optimism, I would say, on the state of the economy and where it's going to go. And fundamentally, there's a few trends that are going to drive where the economy is going to go. Obviously, there's a lot of excitement around the opportunities that are driven by artificial intelligence and the next technology wave, and how that is going to enable fundamental transformation of companies. And that technology combined with the post-global world that we're going to be in, I think gives a lot of optimism of the.
You're not calling it a post-Trump world.
No, it is a post-global world because it's a trend that has been going on actually for 5-10 years, where everybody tries to find their place in how do we play an international portfolio, and that creates opportunities. Every dislocation creates opportunities for companies, and that's where we're trying to support them. The opportunities around AI, the opportunities in a post-global world, the opportunities in the energy world, because there's a lot of questions around the energy as well. And if you put everything together, I think if we're going to look back 5 or 10 years from now, we might see 2025 actually as the year of the start of a great transformation, powered by all of these fundamental trends of AI, energy, and post-global realignment. And that is exciting in terms of the opportunities that it poses for companies.
And I'm sure that there will be plenty of challenges along the way as well to deal with. But 2025, the year of transformation. So let's unpack each of those trends that you just spoke of. And let's start by talking about AI, because that clearly is the big buzzword here. As you speak with your clients today, what is the readiness? What is the willingness? What is the capacity to take the risk at this point in time? What are they telling you?
Yeah, so if you see 2 years ago, it was ChatGPT launch, and everybody was really excited. And this year, the excitement is there. I mean, the models have accelerated significantly. The results of the companies are very mixed. And so now what we're discussing is how do you turn the promise of AI into true results? And we find it exciting that as we listen to CEOs and what we hear on the ground and what we observe from our clients, is we would call that probably only 10 to 15% of the companies around the world are what we would call on high alert status, which is really ready to lean in and to take the opportunity that AI will present in the world, because it will be fundamental. And that is a number that we would love to see increase, so that companies really work on their competitive positions for the years to come.
So this 10 to 15% number that you spoke of, and that's a global number that you're giving us, could potentially be the early adopters of AI at scale. Are there any particular sectors that you find these companies in?
Yeah, there's a few sectors that we've truly seen leaning in the generative AI world. And contrary to what might have been expected, it's actually the financial services industry that's at the forefront. It's more regulated, but at the same time, they're truly leaning in. I think in the life sciences and in the pharma world, we see a lot of opportunities followed by retail. Of course, everybody is moving, but if you would have to say who's ahead now, we would call out probably the financial services industry.
Yes, and I think that's what I'm picking up here as well in my conversations with CEOs. But let's talk about the other bucket that you laid out for us, and that's energy. And I think there are question marks at this point in time, especially in a post-Trump world, specifically on what happens now as far as the energy transition is concerned. Do you believe that the threat of a setback is perhaps overdone at this point in time?
We look at it from 3 different angles, because we see energy as having a triple challenge. The first challenge is probably one of the bigger ones that is emerging, is we need enough energy to power the world, the growth in India, and of course also the technology transformation. There needs to be enough energy. From a social point of view, it needs to be affordable. And at the same time, we need to continue on the transition. And I think each poses different challenges for companies in order to ensure their availability of industry and to ensure a competitive price situation, so that wherever you sit around the world, whether it's in India, in Europe, you have enough energy, and it helps you to make your industry competitive on the longer term. And then the energy transition, we believe, will continue around the world for different reasons: societal transformation, energy independence, and in certain places it's also the lowest cost source of energy. And so we will think that from a market point of view that will play out, and on the longer term we will continue to see investment behind the energy transition if you take it at a global level.
And the third bucket, what a post-global world means in terms of opportunities. Here over the last few years, especially post-pandemic, everyone's been talking about reshoring, friendshoring, supply chain resilience and diversification. What will that now lead to? We've seen some of that happen already, but what will you expect on that front?
Yeah, so this is going to happen, and companies need to think about it. And you highlight some individual questions on topical points. The way we think about it is, as companies, you need to think of your portfolio strategy from a geopolitical point of view. Companies have learned in the past to think about their portfolio strategy in products, in markets, customer segments. Nowadays, you have to think about your portfolio strategy also from a geopolitical lens. Where I'm going to play, where I'm not going to play, where is it worth, where isn't it worth to play? And I think also for countries like India, for instance, what role can I play and should I play into that post-global world? And how do I take that realignment as an opportunity so that I can support my industrial base, my companies in my country, in order to tap into the opportunities that the post-global world will present?
So let's talk about India then in specific. Where do you believe India finds itself placed to take advantage of some of the opportunities that you spoke of in more generally and more specifically as far as Bain is concerned? It's also the country that is home to the largest talent base for you outside of the Home Office. So on both fronts, generally as well as specifically, what does India look like?
Yeah, I mean, India looks great. Like, if you want to be in a position where you still have favorable demographics in the world, where you have an economy that's growing, structurally above 5%, and where you can tap into the opportunities of a post-global world more than almost any nation in the world, I think every country would sign up to that portfolio of opportunities that India is sitting on. And so in that sense, I think it's also good for India then to say, now, how do we put ourselves on high alert around the opportunities so that we tap into the opportunities of AI, enable the energy transition, the energy availability, build the infrastructure to support our companies in the AI wave. And I think that is also something that we want to do together with our talent. As you say, after the US, it's our biggest talent pool. Our consulting staff, a capability center, our support staff. And what we want to ensure is that we will bring our consulting staff and our capability centers towards the future, enabling themselves to be centers of excellence in an AI world. And I think that will present great opportunities, not just for us, but also for our India teams as we look into the future. A great economy, a great country to be part of, to support the growth of the companies there, and great opportunities for all the talent that we have in the Indian market.
Well, Christophe, you've also very closely been looking at M&A at Bain and looking at private equity at Bain as well. So, from a 2025 perspective, what's the expectation, especially when we talk about AI? Do you believe that's going to lead to M&A and consolidation? Also private equity, where is the money going to be headed?
Yeah, so there's two trends there. On the corporate side, there's going to be M&A. And we will see an acceleration of M&A coming out of this cycle. Because if you would put a pause in 19 and look into 25, it's actually on certain dimensions more normal again, coming out of the big cycles of COVID. And so we will see a resurgence of M&A. I think we see it every day happening now. On the private equity side, private equity has gone through a similar cycle as the overall economy, with a peak and a slowdown. But if we look into a long-term trend, making abstraction again of the COVID period, we see that 2024 was already a good year of growth again for the private equity. And we think that the industry is in a healthy base to continue that underlying trend line that we saw before COVID. And corporate deal making will be great, because corporate deal making is typically a great exit route for private equity firms. And then the stock markets are healthy, and IPOs are also a healthy exit route. And when the exit routes are good for private equity, we see private equity thrive.
Is there convergence between buyer and seller expectations?
There's increasingly convergence of buyer and seller expectations, and that's why we see the deal flow again accelerating, I think, which is great news for everybody involved in the industry.
How acquisitive is Bain feeling at this point in time? You've done about 24 acquisitions in the last, 18 odd years. What does it look like from here on?
Well, we do acquisitions to expand our offering, to increase our capabilities, and a lot of our acquisitions that we've done and our partnerships have been in the technology space, expanding the talent that we have to support our clients in their AI transition and transformation. And we will continue to take a posture, because we are looking very optimistic towards the future in looking how we can strengthen our talent pool, strengthen our capabilities in a world of the great transformation, in a world of AI and technology.
So if I were to ask you to give us a headline for 2025 for the world and for Bain, what would it be?
Go for the opportunities as the start of a great transformation.
Go for the opportunities. It's the start of a great transformation. That's the story, that's the buzz, and that is the readout here from the global CEO of Bain. Christophe, it's been an absolute pleasure. Many, many thanks for joining us here on CNBC-TV18. We are going to take a break, but the conversations will continue right here. Don't go anywhere. We're back in a moment with more from Davos.